Welcome, everybody, to Explain It podcasts with Caroline Kane and Ingrid Hernandez. At the moment, Caroline is working her way into the stream. I believe she may have been door knocking. Oh, is that her door knocking right now?
What's up?
Hey, girl. Hey.
Hey, how's it going?
Good. How's your Wednesday? What were you up to today?
I was actually going to get some sales training.
Oh, a little
I'll have to
sales
tell you
training.
more about that later.
Oh, fantastic.
I know,
Uh,
I'm excited. I'm excited.
Cool. More ways to close more deals. Exciting. So
Exactly.
I heard you got blown up. I know I got blown up. I've already sent a few leads over to Mr. Kevin Lucas, who we have on the podcast today. So I'm really excited because I'm actually doing business with him. And I was hoping we'd get closed by the time we had him on the podcast. But unfortunately, such is the market where my property did not appraise at the amount I needed it to appraise. And we'll talk a little bit about that breakdown because he still is making it work. And when you have partners in this business, you want people who will walk to the ends of this earth, jump that cliff, go bungee jumping for you, whatever. And so hopefully that's who I found with Kevin. And so we're excited to have him on. You ready?
Let's do it. Bring them on up, Ingrid.
All right. All right. Hey, Kevin.
What's going on? I've been looking forward to this for a few weeks now. So Ingrid's kind of dangled the carrot for me a little bit.
That's how I got him to give me a better rate.
Ingrid's pretty good at what she does. We've been I know that I've been getting a lot from our podcast. I'm excited to hear because I know nothing. I only know what Ingrid's told me about you. So I'm excited to ask you some questions. And I know that I was just telling Ingrid before we got on here, I had like 30 people tell me that they were interested in this. So we're going to have quite a few people jumping on with just the last minute notification of it. So I'm excited, Kevin. So tell us a little bit about you. Who are you and how do we get money from you?
The money part's easy. Explaining who I am, that's the tough part. Yeah, I'm Kevin Lucas. I am a private money lender. I own a company called Vault Leverage Capital. We specialize in business purpose loans, investments, non-owner occupied. We can do owner occupied, but really our specialty is in that investment loans and working with people that see the real estate as the best investment opportunity there is. And by tradition, since the history of the world, real estate is the best investment you can
100%. So, can you give us a little bit of an explanation of what the difference between a hard money loan lender and a private money lender? Because you use the term private money in explaining who you are.
Yeah, I mean, well, hard money and private money, like I always tell people hard money really started out. I always talk about the mob days, right? That's why it kind of scares people a little bit when you say hard money. Um, it started out, hey, somebody was in a need of they're in a hard situation, and somebody that had a private individual that had money was willing to lend it to them at a steep price, or maybe even, hanging their family's photo over them and saying, we know where you live. And really, private money is a newer thought on that because really what I do in private money, I don't like to call it hard money because I can bail people out of a hard situation, but I'm not looking to do that. I'm looking for a win-win and to where my investors are making money and I help them do that. So that's really the private money lending space really didn't start till after 2012. Friend of mine, Leonard Rosen, who was the CEO and founder of the Pitbull Conference, which is the largest private money lending conference in the country. Um, he really helped institutionalize it to where you have these big groups like Blackstone, um, Rock Capital, RCN Capital, all these different groups that basically hedge fund warehouse money that they lend out on scale. So the more when you do volume, it's all about the numbers. You can do when the average flipper is looking at a property and there's a 25% chance that they're not going to property or make money on the backside, they're taking a risk. When you do that in volume, say a company like Blackstone or KKR, that, buy 5,000 properties and do it, they can lose on 1,000 of them and win on 4,000. And it's still a large amount of money made for their investors and the people backing them.
Wonderful. So you were in this industry, like how did you get started in this industry, and why did you choose to open your own business? Like what's that been like?
It's been awesome. I'm relatively new, I guess you could say, to this industry for a few years now. But one of my closest friends and mentor, he's been in the business for 25 years, and I always call him the king of hard money and private money because he's a partner of ours now with Vault Leverage. His company and our company are teamed up together. And I talked to him for about an hour a day on average, I would say, in the first year that I got into this industry. And I don't know, I feel like 25 years worth of experience in one. I am a good listener when I'm not the smartest guy in the room, and very rarely do I like to be the smartest guy in the room.
As we all should be. For everybody on here just listening in, you are going to learn a lot more when you are asking questions and you're engaged. And since this is the beginning of this podcast episode, if you think anybody can get any value or needs private money lending, or if you have questions, we're going to get to questions at the end of this. Go get your pen and paper right now. Write these things down. If you're the smartest person in the room, you probably should stop listening to this podcast and leave. And I'm going to tell you, you're not going to grow. It's not going to help you. But if you come in here with an open mind and you act like a sponge, you're going to get a ton. And we have 50 minutes left with you, Kevin. I want to be mindful of your time. And I know Ingryd's doing super mom stuff. So
I got all the time in the world for Ingryd. Caroline, just let you know, I'll give you 30 years.
Hey, I like that.
Amortized.
Good lender joke. Okay, so Ingryd, I'm going to let you go, and then I'm going to rattle off my questions because I feel like you have written some out.
Well, he's already answered some of the questions that I was asking about. I think what I'm seeing though, is some folks who think they can just go get a DSCR loan, which is help me out, debt service
Coverage ratio.
Coverage ratio. Thank you. And which means if the mortgage is this, how much are your rents going to cover this? And usually you're shooting for right now I'm seeing like 1.25 or higher, usually, unless you have good friends in high places. And so
I'm doing one for Ingryd at 1-to-1 right now.
Yeah, which has been very, very helpful. Like I said, he's getting shit done for me. So
what is a 1-to-1 ratio? Because the whole podcast is explain it. We got to break this down for everybody. What is a 1-to-1 ratio on that?
So DSCR, when she's saying 1.25, basically at 1.2 is, somebody not great credit, whatnot. It's saying that the property is cash flowing that 0.2 over the mortgage that's being brought in, the PITI, the costs that it takes to run that property monthly. Is your rent bringing in 1.2 over that rent or over that mortgage and PITI?
So almost think of it as like 120%. So covering 100% plus 20% more of what that PITI was.
Okay.
So basically, if she's bringing in like this property, she's bringing in 3,500 in rents, and her mortgage is 3,500 in cost to run the property, 3,500. So it's a break even. And what that works for Ingryd on this deal in particular, we're getting a little bit of cash back to her on her payoff.
Nice.
And she's basically sitting on an asset that hopefully will appreciate, and she's paying off the principal. So in the long run, she's building a portfolio and she's in a good position.
Okay.
That's right. Go ahead, Caroline, get your questions.
Well, I was just going to say, Julie just said, thank you for asking to explain that, learn something new. So awesome. Well, my questions are going to be, I guess I really want to know, why should people work with you, Kevin? Why are you a good private money lender? Besides being ridiculously good looking, I mean, the hairline is nice. I love it. Looking good too.
I appreciate that. That's the first compliment of the day I've got. So you win.
What's my rate if I get some money from you? I know you're doing Ingryd well. What about me if I compliment you?
You get 0.5 DSCR rates. No, really, I've seen this industry from really the institutional private side. I've seen it from the private, the hard money side, private investors. I truly believe that there's an amazing way to do this, and I'm going to figure that out because I don't know. I define myself by somebody that figures things out. It all, whatever it takes. The definition of smart, I always say, is having a problem, being able to solve it. Might not necessarily be a problem, but you can also make something better. So getting in private money, if somebody wants to work with me, period, Vault Leverage Capital, the reason why I started, I think the name, it just holds its weight on what we do. And that's service to the borrower. I think the service industry in the world in general has gone down, and having a lender that will problem solve and figure things out and not just move on to the next deal. Ingryd, we've had to really figure things out on a few instances with it. And for me, I fund probably 75% of the deals that I bring into a pipeline, which industry standards probably like 25, 30%, something like that. Just not everything always works out the way it should. And in terms of what you're going to get from me, you're going to get my connections and the money that I have to lend out is through my investment groups behind me is the best pricing in the game. I mean, really, I always say I can't beat your mom's money. I can't beat your sister's money, but I can beat everybody else's, so.
That's awesome. So you're more affordable. Go ahead, Ingrid. I'm going to ask you another
Oh, I
question.
was going to attest to the rates because I went rate shopping and there was nobody who could beat the rates that were available. And in fact, again, as a good partner, as a good consultant, Kevin was like, yo, if you're going to refinance, do it right now before things start getting more volatile in the market. And so I posted in our mentorship Facebook group, let you know, like, hey, my lender's telling me, go get your stuff refinanced and locked up right now because things are going to change and they could change rapidly. So I feel like Kevin had my back on that. And so then I try to also pay it forward by advising across people who I know follow us and like.
I think that's inevitably you by nature. I think you just pay it forward by nature, Ingrid, is, the short time we got to know each other, and which I can appreciate a lot,
Yeah. Fantastic.
So Kevin, go ahead. Well, I'll ask.
For her, like we had, can we talk hard numbers here?
Sure. Absolutely. Go for it.
I have no problem asking somebody how much money they have in their wallet or in their bank account or anything, because those are questions you need to know or answers you need to know. But in terms of this, we had like a 405 loan amount, and it ended up, there was a few things that happened with it. The appraisal came back under what we thought.
Yeah. Came back at 542.
Yeah. And with that, by the way, your property is 720 Longfellow, Tucson, Arizona. Usually I remember the zip code too of all my deals, but not this one. I'll get it. But that property, so we had her at a lower rate, and then because the appraisal came back in where it did, I thought, how can we can pivot this to a higher rate, but get her cash out? Because she actually, for the interest that she put on her property, her payoff is 405 or no, 426. Payoff is 426, and then she has some interest. So she would have come to the table with a lot of money. Instead, now we have a loan amount of 433 with a little bit higher interest rate, but it makes sense.
Yeah. The interest rate is only making, I think not even $200 difference a month. And so it made sense, and it ended up putting more cash in our pocket to take care of our private money lenders, which is my first objective on this deal, which is how do I pay back the money I promised I would pay back with the interest I promised with, right?
I'm gonna jump in there because guys, that's really important. I've had a few people say, oh my gosh, I lent money somewhere and like, I'm nervous, like the market's changing. If you're going to ask somebody to lend you money, it is your duty to return that money to them. You are going to be bad mouth. So I love that you're bringing that up. You're making sure that your private money lenders are taken care of.
100%.
And we got her on an 80% LTV, 80% LTV DSCR loan.
Yeah. You're not getting those right now in this market. So LTV stands loan to value. So my property was valued at 542. So the loan to value of 80% means I'm going to get 433. So just so that math
You guys like
makes
my
sense.
calculator? I'm old school. I love it.
I love it.
I beat this thing to death.
So one of the things that people were doing, which made sense at the time,
80%.
was saying, hey, I'm going to get, the Burr method, right? I'm going to at least have at 80% enough of equity for me to go and get a loan. Well, what are we finding in this market? With values going down, not only are we not getting lending at 80% loan to value, it's actually getting stricter. We're seeing actually closer, and Kevin can attest to this, 68% loan to value. So it's even tighter numbers. Things have constricted. So something people forget, and I very, very much remember this when we went through our recession, during the time that, people were going through foreclosure, a lot of short sales. Lenders stopped lending. The things got really tight. So if the economy gets a little bit tougher this year, you have to also bank on the fact, pun intended, that lending is going to get tougher. So are you going to have a lending partner that is going to go to bat for you and be able to get you the best deal out there? Or are you going to deal with a lender who is now working at the grocery store because they aren't able to do the type of things that they're doing right now as the economy is in the way it is? So I'm going to guess Caroline left us because right now we're trying to get more people on the podcast. Normally we have around 100 or so. And I'm sure she's live on Instagram telling people to come over to YouTube. Go tell your friends, go tell your mama, come check this out. So yeah, lending requirements have gotten tighter. And so we have to understand that. You have to think about that when you're forecasting what kind of economy are we going to be in the next 3 to 6 months. And that's something you, as a flipper specifically, or even as a buy and holder who does the Burr method, that's something you have to understand, honestly. And maybe it's okay for you to trap some money. That's exactly what I'm doing here. So one of the things I want to be is very transparent, very real. If I lie about my numbers, it means I'm not helping people, and I just don't want that bad money karma. So this property at the time that we got it was supposed to actually be ARV'd around 650-ish. So we were supposed to make good money on this property based on a couple of properties that were really fixed up, really nice. And we're like, oh, we can compete with them because the design of this property is amazing. 2,700 square feet. We actually put an additional 600 square feet or more in the house. I can't recall now those numbers. So we knew we were going to be able to compete at a higher market. Well, we had a shitty contractor, which we talked about in a different podcast with my new contractor, Tony Gomez, and his fiance, Nicole. And so they came and rescued my property. Unfortunately, values were going down. So I knew that my appraisal was going to become tougher. So I was hoping, really double, crossing my hands, like whatever I could, and it just didn't work out. We were hoping for 600 and it came back at 542. That was the reality of what was happening. So I had to make a decision. Do we put it on the market and just take what eventually would be a loss, because we did put quite a bit of dollars into this house, or do we keep it, think like long-term investors, and less about the money now and more about the money later? And that's the decision we decided to make. And we're going to keep it as a midterm rental. And I was very, very, very happy to have somebody like Kevin in my corner.
Okay. So go ahead, Kevin.
Well, my director of operations sitting over here, and she just messaged me and said, we are getting live submissions for DSCR loans right now.
Yeah.
That's where
Where's that affiliate link, Rochelle? What's up?
yeah.
So, you guys lend nationwide, Kevin, or are you mainly focused in Arizona?
We can lend in 26 different states right
Okay. And is that on your website?
now. I don't know. Our website is a little raw right now. I'm having somebody that I just hired to work on it, and I'm pretty particular about things. So I wanted it clean and simple at first, and then, I want it, when it's said and done, I want it
He
clean.
doesn't sound like a professional golfer at all.
Not a professional. Yay.
Yeah.
No, he's done right the first time. I love it.
By the way, we got to say this. I'm not just a DSCR lender. I just closed a deal today with actually Jason Oppenheim with their group, from, the Selling Sunset and Selling OC. One of my really good friends is his number one agent over there. We just sold a property and we're doing it 9.5% interest rate. So if you guys got deals here in Arizona, wherever, let me know. Fix and flip loan, 9.5%, can close in 2 days.
Wow. You heard it here, folks.
Dang, we're on time. Okay. All right. Well, you have any more questions? Because I'm gonna rattle off. There's a bunch in the side chat right now.
No, go for it.
Perfect. Okay, cool. So what is the best way to leverage equity in a few different rental properties without a refinance? Got a question for
To
that?
leverage equity
And a few different rental properties without a refinance. Am I reading that correctly?
Best way to leverage equity in a few different rental properties without.
How are you going to do it without refinancing?
Yeah.
Yeah.
Cool. All right.
Jared,
Maybe
you
explain a little bit more on that one.
Yeah,
I think
I was thinking maybe
think
they're talking like a portfolio. I don't know how portfolio loans work, but maybe that's what
we can do
Jared
those
was headed.
too.
Yeah.
Portfolios are basically just lumping all your properties together and they're under one, balloon of a loan.
Oh, maybe that might answer that question. So if you have varying equities, but you have equities and you want to just do it all at once, you would do a portfolio loan. So there you go. That's your question.
John Hoffman said right here, says hard money and private money. It's essentially the same thing. Hard money and private money is the same thing, but if you're literally the same thing. But if you're talking about hard money, yes, it's traditionally, people would say hard money more when they're talking about a short-term 12-month bridge loan, which is usually typically interest only with a balloon payment on the 12th month. So if it's a $300,000 loan with, let's say, 10% interest rate, you're looking at roughly just under $3,000 payments a month. And on that 12th month, you pay off 2,800 plus 300,000. So it'd be 300,000, 200, or 302,850, whatever it may be. That's more hard money. Private money is just a step under. We're not regulated Fannie Mae, Freddie Mac loans, right? Like we're underwriting. Typically, DSCR stuff, when you have to get strategic, can be a little more stringent, as Ingryd has realized with this deal that I'm doing with her.
And I don't have colon cancer, guys. The colonoscopy is so far so good. Just kidding. Because we always talk about going for loans, like going to get a colonoscopy.
It's a lot of work to lend money or to get money lent to you.
Yeah. And I understand it though, right? And here's something that really like burns my buns. People think that they can just come and do things like a BRRRR method or fix and flip that then has to turn into a finance situation. And they have no one as part of their partnership with good credit. So if you haven't thought beyond that, I mean, I understand we're risk takers. Like people are like, I'm just going to sell it. But I've had a couple of people actually reach out and say, I don't have good credit. What can I do? So I actually have an example that I brought to Kevin to say, okay, it looks like this property is at 70% LTV. This is hard money. Could I possibly buy it with hard money and then just do what's called a rate and term refi? A rate and term
100%. Right down the fairway. That's easy peasy.
So I think you're about to explain what is a rate and term refi for all of us new people.
Rate and term refi means you're not getting cash out in it. So if the payoff is 70%, you're getting a 70% loan to value refinance. So it could be less than that, right? Your payoff could be more than that, but you're not getting any money back in your pocket. Lenders typically, for everybody to know, like getting cash out is always a little bit lower LTV because it's just like, why are we putting cash back in this person's pocket, to go and do what, right? They'd rather rate and term.
To go buy more houses.
Exactly.
To go buy some
which is great, which I do a bunch. Like, I don't know, I'll talk high level about what I've done on, like, I just closed 3 deals last month in Texas. They were, total loan was 4.99 million on the 3 properties. They were ground ups, right? They were a ground up builder that their loan was maturing and they needed to refinance, and they refinanced into a 75% cash out bridge loan. And They just needed the time to be able to sell the property. Well, when they did that, they're bigger loan amounts. One of them wasn't quite done yet. And my underwriter, when this is when I was with old company, well, I guess a few months ago, he came back and, their credit wasn't 780. It was like 701, something like that. And he's like, okay, these are the terms I'll do. It's like 75, 65, 65. And as I read the credit report, we only did a soft credit pull. As I read through the credit report, I underwrote the deal after I got that back. And I'm like, okay, because I'm not going to win this deal at 75, 65, 65 on each property, the three. This borrower has no delinquents, no nothing on their credit history, nothing. The reason why people that do ground up, they get out a bunch of credit cards to fund all their needs for the property, for the build. And their credit was, they had a lot of credit out there, or a lot of, cards open that were maxed or whatnot. But as soon as we did the loan, I went back to the underwriter. I said, essentially, as soon as we close this, because they were getting 1.1 million cash out on those deals. I said, they're going to pay off their 200,000 in credit card debt that isn't ever delinquent. And their next credit report is going to be a 780 borrower. So essentially, as soon as we close this deal, we're lending to a 780 borrower. Deal made sense. We got them at 75, 75, 75. And actually, in the way that I did it, because the appraisal came back higher than they wanted, they got $125,000 more in their pocket at the end of it.
Nice.
Wow. So it's nice using you
I
to
did
help.
that in 5 days. I did that in 5 days. Closed from initiation to
Wow.
closing 5 days.
Okay, so that seems like an exception, though. What is your typical
I love
closing date?
exceptions.
Yeah.
I mean, I've closed a $3.5 million deal in 36 hours. Like our typical closing. I'll tell you this is for everybody. Closing, and Ingryd, you've been on it, but closing, I look at from the time I have a full file, typically. But there's other times in deals like that when it's initiation, whatever. But borrowers hold up the closing because when they don't want to get the documents or the items needed over quick enough, they think it's just, we'll get this right before closing. Well, we as lenders, you got to have a full file to look at and know everything before you can really push that file through. So I can close a DSCR deal in 10 days, no problem, if I have a full file from the borrower.
Okay, so let's put a pause on
Ingryd,
that.
on our next deal,
Oh.
our first deal together is always the biggest headache. And I try to make it as least amount of headache as possible. That's the whole thing that I'm trying to do. Make this as simple and as easy on the borrower as possible. I'll write up operating agreements, whatever. Hey, does this match it? Here, DocuSign, right? Like, for my borrowers, and do everything I can to make it easy for them. But now that we have a full file on Ingryd, the next deal we do is going to be easy peasy.
Lemon squeezy. So I want to reemphasize this piece is when we're over here talking smack about lenders and underwriters and things like that, about how long things are taken, oftentimes while we're quickly pointing at them, we have three fingers pointing back at us, right? Generally, we're the ones hanging up the show because we're not providing things fast enough. I will say I've been on my game with Kevin, like, especially since I have all my LLC stuff all in folders in my Dropbox. Like, hey, if you need something, I'm just going to send you that link. But at the end of the day,
can we say this to that, Ingryd? That a borrower that is organized and keeps their files clean and knows where everything is, which everybody should be doing. I know some of my borrowers, because I get their bank statements, everything. I write up Excel formats for them and show them their debt service for each month on all their properties and everything. So they have that and helps them do better business. And sometimes they don't even know how much money they have in real estate or how much they're worth or whatever. And I pull this up for them, like, this is if you go on this road, you'll be broke in 5 years if you don't, recapitalize or whatever. But it's cool for people to look at. But a lender wants to lend money to somebody that's on top of their game. 100%. I love working with experienced clients that know their business. When I do a $3.5 million loan, it is 90% of the time easier to close than a $250,000 loan. Because usually the person that has a $3.5 million property is on top of their game.
Yep.
And nothing changes in the underwriting. It's still the same requirements, still the same guidelines.
It comes back down to your systems, guys. If you're unorganized and you don't have systems, when things get uncomfortable, you're going to go back to your habits. So if you have those systems to fall back on, it's going to make lending easier and life easier. So that's good to see. Ingrid, I know that you pulled up another question here, and I'll read it off for you. Kevin, are down payments always needed?
Always, unless you're strategic, like Ingryd, where they find what we call a gap loan. It's basically bridging that gap between the down payment that the borrower is putting down and the LTV that the lender is lending out on the deal. So if it's 75%, they're finding that gap at 25%. Now that's only on a purchase. If you're doing a rate and term where it's, even across, you're not going to be putting any money down.
Yeah.
Or if you're getting cash out, sometimes you're getting, money back. But in terms of a purchase, if I lend you money in a slightly depreciating market at 100% and you default on that, my equity is negative.
Mm-hmm.
And not to mention closing costs and the hassle of having to take the property back before close and all that, right? That's why 100% lending from one person is just not, or from one lender, it's not realistic. And what happened, so everybody knows, and this is great information for everybody, when you have companies like Civic and all these, other big private lending companies that are kind of falling out and their capital is getting taken back from them, a lot of people competed. The market was going up like this.
Mm-hmm.
So these lenders are competing against each other to get the borrower. So they start lending at 90%. Well, 90% in an appreciating market, 2 months later is an 85% loan or an 80% loan. So you're developed as the lender, it's becoming a better and better loan. Well, as the market plateaued and then came down, they were still competing up, doing 90% loans with 100% of rehab at whatever. Well, at the summer of last year, that's a terrible loan now. That's a bad loan. That's bad debt.
Our market has gone down so much and you're upside down in these properties.
Mm-hmm, mm-hmm.
So a lot of people, because so many people got into the fix and flip game and the investment game in the last 3 years, and they're so used to this 90%, and all this. So
it's going to sit and wait. It's going to appreciate so much.
Private money is. It's like no, it's more common sense than that. It's like if worst case scenario happened and I take back this property, would I lose money or make money or break even? That's the way the lender looks at it, and that's the way everybody should look at how they're going to do it. It's risk factor.
That is so huge because I feel like a lot of people just get into it because they want to get into it. Oh my gosh, I watched HGTV. I saw this busted house. I can get into it, guys. Especially now, this is something that we heard in our group. Like rates are going to go down. Like we're going to probably see like a 15% drop in the market in the next 12 months still. And we have just hold on. Like we were told the other day, if you're buying houses for cash and you plan to flip them, get them at like 30% of ARV. Like you need to have a good deal because if you go in and flip it, I'm quoting directly from our mentor. If you go in and flip it, you need to have the renovation costs and you need to get your return on money and you need to account for prices going down even further. So get 100%. Things from April 5th, 2023. If you're buying something like soon, get that 30% of ARV for cash for you to be able to make some money on that.
So we have a cap right now at usually 75% loan to ARV. Some MSAs it's 70%. So which means same instance, if the market were to go down a year from now, that 30%, that loan that we put into it, that we still have enough equity to at least break even or make money.
Yep. That's exactly why those LTVs are there.
Caroline, great point. And to you guys' mentor, that's dead on accurate.
Good. Well, I'm glad to hear that. I'm glad we're learning the right things. I have some more questions I want to rattle off, and I know Derek Barton has asked this. He's messaged me a few times before. Have you ever had to send a cure notice as a lender, and how is the foreclosure process? So have you lended money to somebody, and then they just cut and run?
I'm dealing with that right now.
What is that?
How's it going?
The last few weeks, it's for this property, and it's in LA, northern LA area, and it's a hassle. I mean, it sucks because they're going through. There was 4 people on title for 3 LLCs and 1 individual or something, but they couldn't get their tenant out, And for a year now, the tenant hasn't gotten out of the property and they've just been living rent free, right? And so they haven't done a very good job trying to get them out, I guess. I don't know, but 3 months late on their payments, haven't made them. Well, there's a 22.9% default rate that's about to go in if they don't bring the loan current. And foreclosure process sucks. We're not in the business for our borrowers to default or to foreclose on them. We don't. The reason why these capital groups, when I talked about they have bad debt out there, well, they're having to do a lot of foreclosures and stuff. Well, what does that take? That takes man hours, that takes money, that takes everything. So these lending companies aren't set up with a whole branch and division to work on foreclosing
Let's
and
keep these properties.
listing
Let's
these
start
properties
managing
and selling them.
Mhm.
Private money. We're in the business for the win-win, and the last thing we want to do is have to take back a property. But
Can I take
you
over
know,
that loan and make it
Yeah.
current? What's up? How can we
Tell us about this property. Are there
as
still
much as I
tenants
can
in
say,
it?
there's still tenants in it, I guess, and they just had a court hearing to get them out. I think they are getting them out. The property has appreciated. That person is calling me right now.
Mm. They're like, "We heard your
The ears are ringing.
talking smack." Anyways, let me know if I need to buy that
Hopefully
stuff.
he made it current. I don't know. I've been pressing him. He said he's going to do it today, but we'll see.
Wow.
Yeah, it's a headache, and it's a headache for if you've got private investors in the deal, if you got whoever. But it it's a it's an industry that inevitably you're going to have some heartaches, and that's when I see my borrowers struggling or something. It's usually my worst days. So I do everything I can to make it not that, because it breaks my heart. I like to win,
Yeah.
and I hate losing. And if I'm teaming up with somebody and I'm lending them money, that's a team, and that means we're both losing. So
Yeah. I don't know if I already answered this. It was definitely in my head, or I questioned this. What are the qualifications to borrow from you, Kevin? Did I already pull that one up?
so many different wide ranges. If you're looking for a bridge fix and flip, all I need is simple, your social security number, your name, property address, prelim, escrow instructions, purchase contract. We run a simple background check. We don't even do a credit. If the numbers make sense, we do business. We run our own desktop appraisal. Um, it's common sense lending to the T.
Ooh, nice. Okay, good to know.
So it can run the whole gamut. So let's clarify one moment here, though.
Okay.
So if you're an investor and you plan on keeping your property, goes back to what I originally said. Like if you don't have a good enough credit score and you're a one-person LLC, you may want to consider a partner
Get
or
a sugar
something
mama
like
like you?
like a partner like me.
Yeah, get a sugar mama like you.
Uh,
Sugar mama partner?
I don't know. But I will say that if you see these because we're doing a lot of calls right now, a lot of lead genning, and there's investors in trouble over bad credit scores. So if you find people with deals out there that have 70% or less loan to value, those are potentials. And it's exactly what I just said right now. And Kevin can help you with both of these types of loans. You take it over with hard money, or private money, if you will, which is quick cash money, and then you start a rate and term refi.
Yeah. I mean, everybody's so bent out of shape on hard money, private money, whatever. It's money. If you get the money, who cares what it's called? Who cares what it is, right? If
Mhm.
as long as it's not illegal, whatever. But yes, let somebody problem solve for you that is in this industry and that does this day in, day out. This is what I always say. Like the biggest thing that I try to do on my calls, especially with new borrowers and stuff, is I try to give them a little bit of knowledge about options and stuff that they can do. Our motto vault is, RNS. I came up with this: relativity, need, and solutions. So find the relativity that you might have with that client, find out their needs, and find multiple solutions for them. Give them options. But you don't know what you don't know in life and business and whatever. You don't know what you don't know. And I know minuscule compared to, one of my mentors, great friends that were talking business last year, this club called Hideaway. And I'm sitting at the table with one of my best friends, Zach Siegel. He leased Uber their building and Square their building. He won Real Estate Deal of the Year 2 years in a row in California. And then my buddy Mark, who's king of private money, and then my buddy Pete Chapman, just all successful multimillionaire dudes. We're sitting at dinner and they're like, Mark's talking to me about business, and he leans over and he's like, look, Kevin, do I have all the answers for you? Yes. And me and Zach just like belly up. We're all just dying laughing. But what Mark said after that, which was so smart, is he goes, look, I have all the answers for you in my lane. Pete has all the answers for you in his lane. Zach has all the answers for you in his lane. And if you don't search those people that do have all the answers for you, if you don't talk to them, if you don't, you're only going to know what you know.
Yeah. I like that you bring that up too. Also, like, because we talk about this a lot. They said they know what's in their line and their lane, what their specialty is. They don't cover the entire board. Guys, don't. Who was this? You, Ingrid, that I just heard say? I don't want to use a general contractor that says they can fix everything in the house. That's the worst kind of contractor you want to work with.
That wasn't me, probably Tony.
It probably was Tony.
A jack of many, a master of none.
Yeah, you do not want that. You want to master at one thing, and that's who you should emulate. Like, don't go and take freaking tanning advice from me because I just get a sunburn, okay? Like that, I'm the worst person to go ask how you can tan, okay? Find somebody who's tan and has that perfect skin that you want in that situation. Find the person, yeah.
I'm just kidding.
But you know what I mean, guys? So I really appreciate that you said that, Kevin. I want to get through it. I am live on Instagram, so I have a bunch of questions on here. But I want to get to the rest of these with our time that we have. Kevin, do you only lend in the first position?
I have partners and, different people that will take second position. But my money's always in first position.
Love it. Just for everybody, because we are explaining it, why is your money in first position? What does that mean when you're lending on a property in first position?
It means that if anything were to happen into foreclosure or whatever, the borrower doesn't pay, I control what happens with it.
Gotcha. Got to foreclose. Got it. Okay. Is there a minimum that you will lend? Oh,
100,000. But if you bring me a $50,000 loan that I can charge 30 points on, I'm going to do it.
Love that. Okay. Everybody's asking what state you'll lend.
26 different states, some all the way through Arizona.
Yeah.
Are they all red states?
Yeah, that's probably easier to say. Do you lend in any blue states?
Places to invest right now.
I guess California is blue. He's lending in blue.
Mm-hmm.
California's actually doing pretty good right now.
Really? Okay. Let's see. I don't know if I want to ask Jared's question because the last time he kind of confused me. I've got a debt secured in first position on the properties, but this is from his earlier question, but a ton of equity that I'd love to use somehow. Been turned down on lines of credit and I'm looking for options.
Yeah, call Kevin.
So he's saying he wants, he's got great debt secured. He's looking for a second or something.
Mm-hmm.
I can shoot you in the direction of people that will take a second, or I can, help make that happen. But really, don't over leverage yourself, man.
Yeah, I would say lines of credit. Think of a HELOC. Right now, even the best of the best are getting 9%. So that's something to be very mindful of. So actually got to go to lunch today with Susan Tierney and Scott Horn before they left Arizona back to Texas. And that's exactly what they said is like lending is starting to get tighter on the more commercial based lending. And the interest rates are ridiculous. So I asked them, well, what's your solution for that? And the only solution they have is to go to private lending. So instead of like here in Arizona, for example, I have a HELOC with National Bank of Arizona because they're more of a regional bank, obviously. Bank National. I don't understand the word National Bank of Arizona, but whatever. Or like your credit unions and such, like they usually have a better interest rate for things like HELOCs, other than your mother or your sister, as Kevin.
Yeah, regional banks, if you can do that and stuff, typically, will make stuff happen more for you than big, bigger banks out there. I think what he's saying too Jared, I would like to know what your debt is. Like, what is your interest rate? Because I mean, if you have a ton of equity, then is it a
Yeah.
chunk out in some position?
Yeah.
So if he's got a ton of equity, you date the rate. You don't marry if you're going to have that, if you're going to look to build your portfolio, it sounds like you are with, pulling the equity out. Um, Rates are going to fluctuate and come down or do whatever. You can always refinance. That's always an option every single time. People are so worried about buy down points or what's my prepay? What's a $5,000 prepay when you're refinancing into something that's going to better you in 2 months? You're going to, I don't know.
Yeah.
There's so many different avenues. I'd like to know what it is. What his interest
Now we're
rate is.
curious, Jared. You gotta tell us in the side chat. Okay. For the earlier one that you just described, happily homeless just said, you just described my current situation. Use cards to finance a new build, score dropped from 820 to 720. No derogatories. Looking to cash out, refi, and pay off my cards.
Call
and
me
get
happily homeless.
Call me. We'll get you hooked up.
By the way,
Okay.
Rochelle is in the chat. So if you
Okay.
have a question about whether or not they lend in your state, I'm sure she'll answer you
100%.
as she is the backbone. And I'm seeing a pattern here. Like the biggest companies who do their shit right have women running the business, right? You got Pace with Molly, you got
Mhm.
Susan with Scott, and you got Rochelle with Kevin. I'm just saying, I see a pattern here. Hopefully, these ladies are getting well compensated for all the shit
Well,
they
there's so many things that women offers that a man doesn't, right? And
did.
I always say 1 + 1 = 10 when you put two different people that are smart and can collab and put things together, right?
For
It's a
sure.
compound effect, and Rochelle is 100% that for me. Without her, I don't know. Thank you, Rochelle.
Okay, so John Hoffman had a question for you. Do you also deal with commercial lending? I recently met some clients that build hotels and deal in the hard money space, or or private lending.
Yeah, I'll do it. Like, a lot of things is connections in this industry. It's like, how many, you know, 6 degrees of separation from Kevin Bacon, whatever it is. It's like that line. You don't know that, Carolina? Like, you know that line?
No?
6 degrees of separation
Okay, we're
From
getting
Kevin Bacon.
older. Actually, I don't know how old you are, Kevin. I'm 41.
34. I'm
Okay.
34.
I'm 30.
It's an old line.
Yeah,
It's
6
Kevin Bacon.
degrees from bacon. Kevin Bacon.
Yeah,
Yeah.
6 degrees. Yeah, there you go. So yeah, I mean, bring the deal to me. I have capital partners that love commercial deals, and they have private money that they deal with it too. I can close probably a $20 million deal on a commercial property in 14 days.
Okay. Now I have just a bunch of people wanting your contact information. And I know I was talking to Ingrid. If they say that they saw the podcast and they are sent from us, they just say, "Hey, we heard about you from Caroline and Ingrid, and you're gonna help them out, like get bumped to the top of the line, hook them up with a pretty good little rate."
Absolutely. I'm going to do the best for all my clients. And there's not enough hours in the day, but I work my ass off. I can't stop.
Yeah,
If I've
he's
got something to
So
texting
do,
me
I
what?
at like
do it.
10 p.m.
Yeah.
That's a motivated person to work with. So how can, just because there's like 7 in a row that ask for your contact information, how can people reach out to you? Are you on
Best
Instagram?
ways.
Can we find you on Instagram?
Yeah. Vault Leverage Cap. So Vault Leverage Cap. So VaultLeveragecap. Hmm. Oh,
Okay.
yeah.
I'll pull
And
it
here's
up.
my business card. You guys will like to see
Got
this.
you.
This is how we do things at Vault Leverage. So there's the
Oh.
business card. Kevin Lucas, Vault Leverage Capital, and we
Sorry,
do
There we
them
go.
at metal
Kevin.
business
Sorry.
cards.
This is what the young ones do now. We got a QR
Yeah.
code to give us information.
I
Blink.
got somebody. You want advice on that? I was at a broker open house with some of my partners and stuff, and uh, this girl comes up with title, and she comes up and gives me that, and I scan it, do it, save it in my phone. Next day, I go, "What was her name?" I cannot find her information.
Mm.
I forget her
Ooh.
name, and I have 4,000 people in my phone. I don't know, just a thought on that.
So one of the things that you're supposed to do
Oh, thanks for pulling that up.
after you get people's information, here's a little tidbit that was shared in one of our last masterminds, is you take a picture with that person. So after you download their info, you quickly send them a picture. So then it's easier. Now you have a quick reference in the text, and then now they actually put a visual cue to you. So there you go.
I do that at
Love it.
conferences. I have them hold their business card up and I take a picture of them.
That's funny. Okay.
Yeah, that's my
I'm
Instagram.
just
Come
trying
follow
to-
me. Yeah, great way to get a hold of me on Instagram. Also our website. Leave your phone number if you do. It's vaultleveragecapital.com. And if you send an inquiry or whatever, want to price out a deal, whatever, I can size deals basically in my head. If you tell me the scenario, I can tell you what I can do. But I can also size them for you and price them out for you in minutes. So
Sweet.
leave
So
your
they're
phone.
going to crush your DMs. They're going to slide into your DMs and get more
I'm
information.
single, so that's not.
There you go. You singles,
We got to
lady.
find Kevin a sugar mama. All right, cool.
Oh,
Mama,
Sugar mama?
right? I'm sorry, I made an assumption.
I don't want a sugar mom. I want to be a dancing monkey.
Okay, let's we have 9 minutes left, so I want to be mindful and try and get through as many of the questions because I still have not gotten to over my Instagram live yet. Can you lend or lock a rate in during the rehab process?
So during the rehab process, lending mid-construction, I always tell people this. It's really hard to determine the value of a property when it's not livable in that mid-rehab. Like, if something's gutted or whatnot, like how do you determine what this property's worth? I've done them on exception basis. I've really, we're a really good borrower that has a, history of doing closing deals, getting it, making money, all that. Margins are good. I can do it. In terms of locking in a rate, private money, there's not a whole lot of lock-in rate, only, a couple of weeks out, maybe from closing a loan. It's nothing like Fannie Mae, Freddie Mac back loans,
Love that. And then here is Rochelle in the side chat, just so everybody can see. So there's a visual. We do DSCR for long-term rentals. That's what the LTR stands for, and short-term rentals for single-family and multifamily units, fix and flips, rate and term, refi, ground up, and bridge loans. Love that.
Boom.
Rochelle is on it.
And look at
I
her
didn't
cute
even
little
ask.
boxer.
I know he's so big. Oh, where's Baxter?
Oh, my boxer's name is Baxter. So
Baxter.
adorbs.
All right, now let me go to my Instagram here because I've been avoiding their questions. I wanted to wait till the end. There was quite a few. Let's see if I can make them bigger. I had one about, do you guys lend on, I guess you would do from the ground up, because somebody said earlier they had like 250 acres, and here it is. I have a client that's looking for hard money. She's 52 acres in New York by Albany, wants to sell off part of it and develop part of it. Does the loan go against the property?
Yeah.
Easy money.
That was an easy answer.
There we go.
Okay, somebody's asking a question that I would argue you may have never even heard of.
Ooh, okay.
Kevin, in our mentorship, there's something called a Morby method. And in fact, I've done a Morby method. I think I was the first student to record a Morby method with there was one other student that did it, but he did it with his best friend. So you can't really count that one. The one that I did was with the complete stranger. What a Morby method is just a traditional investment lend. And once the transaction's completed, you put a second position that the seller is willing to finance. It's very, very, very common in commercial lending or multifamily, for example, where the seller's willing to put a second position to seller finance. It's just not common in.
So what's happening? They're looking for a loan on the first position. Are we allowing a second position by the seller?
Correct. Mm-hmm.
Yes.
There you go. You heard it.
Financing like that is like strategic, but everything like this Pace Morby stuff and Stephen Hunt, how I got to know you.
That's how I met him.
Okay. Love the hunts.
It's thinking outside the box. I mean, really, and that's where, when I say private money, it's a youthful industry. It really is. It hasn't been around forever. It's got a lot of ways that it can grow, and I think, uh, it's endless in the way that it's going to grow, and being strategic on stuff like that. If it makes sense, let's do it. Let's figure it out.
And generally speaking, this is why I've also said, at least now with Morby methods right now, you want a Morby method that's probably 50 to 60% LTV. Now you heard it from Kevin already. If he's saying the max he wants to be is 70% LTV on a property just in general, you have to think that. So if you're going to have a first position and a second position, in order for a lender to be okay with it, that means your total debt against that property should equal to 70%, right? So if you're going to get a Morby method loan, it should probably be around 50, 60%. And that seller finance portion, you likely need to be around 10% or so, 20%, depending on what it is, if it's looking healthy. But I don't know. I don't want to put words in your mouth. Like, what if the rest of the seller finance piece is the other 40%, 30%, but it's zero interest, no repayments for 10 years. And we've seen that too. So that means the property is fully leveraged at 100% from a note perspective.
Yeah, I mean, the way you guys do stuff to figure out, how to make money and do deals without putting any money down is impressive.
Yeah. All right. So what you heard, but I think what I'm hearing Kevin say is send in the deal. If it looks fantastic, he'll work with you. As long as people are making money, that's what makes sense here. So you have to be making money with those rents and making sure that it's a sound deal structure.
Yes.
Perfect. Well, then that should answer this next question that I have from Instagram Live. It says, maybe this was asked already, and I apologize for being late. Can you convert yourself from being a private money lender to equity partner to avoid a short sale / foreclosure, 80% equity ownership, including rental profits? I mean, if it's a bad deal, then no. I'm not, you guys don't want
Ask that one
profiting
more
on
time.
rents and equity partner. I don't know you. Are you gonna take me to dinner first to get to know you?
Yeah, let's
I'm not gonna partner on equity with anybody. I'm 100% owner of Vault Leverage Capital. It's gonna take a lot for me to be able to bring somebody in, let alone for me to go into business with somebody else.
Makes
Your
complete sense.
reputation is everything that you have and the way you do business. And as soon as you start partnering with other people and doing whatnot, you jeopardize that. That might be out of your control. I like being in control.
All right, let's get to your question that's here, Eric had. Do you guys loan on businesses? So if somebody wants to go buy a liquor store, would you guys lend on that?
I'm personally not going to lend on it. We're not going to do that. That's not the loans that we're in for. We're in, real estate loans, business loans. What's it collateralized against? Not really collateralized against anything. It's just really a note that you're just lending somebody, money is like, hey, I'm going to go to the bank here. Let's sign this contract. I give you this money and you got to pay me back at a certain time. But what can you take back on it? Like, you know what I mean? Like if the business fails, what are you taking off it?
Yeah, exactly. It's like stocks. No, you don't want to do
It's very
that.
hard loaded.
And
It's
just
very, very, if people want it. It's a very hard thing to do, but and like people want loans on restaurants. It's like, what is it? Like 75% of restaurants
they fail in the
go
first
under.
year.
Yeah.
So yeah, so you want the sure thing, and people, a necessity is housing, so it makes sense why we're in real estate and you're lending on real estate. Ingrid, I want to ask my fun questions. Do you have anything else?
I think we're good.
Perfect. All right, Kevin. Saw Eric's name there.
Can I show you my favorite quote? This is our quote. No, grab it for you. Hung this up in the office.
How do I make him the big one?
This quote was from Calvin Coolidge, which he was born in 1872, died in 1933. And my dad got this for me when I started the business. Nothing in this world can take the place of persistence. Talent will not. Nothing is more common than unsuccessful men with talent. Genius will not. Unrewarded genius is almost a proverb. Education will not. The world is full of educated derelicts. Persistence and determination alone are omnipotent. Calvin Coolidge. It's a great quote.
Ooh.
Live by it. I mean, you could be one talented person, but again, the world has a ton of unsuccessful men with talent. It's very common. And I have on here the definition of derelict, which is shamefully negligent of one's duties or obligations. And don't be a derelict.
Yeah.
I love that. Well, thank
It's
you
like,
for
I know I
sharing.
should have
Don't be
done
a
that. And I
D. Don't be a D, a derelict. Yeah.
didn't. I said, don't be a Daryl. Come on.
Yeah.
Don't be a
Oh
Daryl.
no. Don't let
Oh.
your housemate know.
I won't know that. But, all right, my fun question for you, because I have to go to an award ceremony after this for someone. If you could go back in time with yourself to yourself for 2 minutes, anytime ever in your life, when would you go back and what would you say to yourself?
I would go back in terms of like a memory, like something that I enjoyed.
You can
Yeah.
go back in time and
Well,
talk to
first
yourself
tee
at
at
any
the
time.
US Open. When I played in the US Open in 2015 on the first tee, that was probably the most. I was the first shot shown on coverage that year. That was amazing. And I had a great shot. I would absolutely go back to that. If I were to tell myself something, I have no regrets in life. Every single thing that I've done, bad, good, whatever, it's a positive for me now. I've trained my mind that I look back in my past and I can't find a single negative, because the butterfly effect is a real thing. The way I look at it is, if I didn't do that, maybe I would be in a completely different position than I am right now. And I love the position I am right now, and I love where it's taking me. So every single thing in my past, I don't think I would tell myself anything.
I love it. Dang,
That's
that's
great.
exactly what
Big Boy
what
said
Big
from
Boy said
Outcast.
from Outcast. Uh-huh. Yeah.
Really?
Yeah, he literally said, what we heard that in January. It's the
Mm-hmm.
exact same thing he said.
Yep.
Because that
That's
just
true
keeps me
gratitude.
moving forward. I think about what I could have known in the past. How do I know? You don't know what you don't know. So how can you regret something that you didn't know at the time or did or whatever?
Mm-hmm. I'm listening to Outwitting the Devil, and that was part of one of the concepts they actually talk about in the book, which is in every quote unquote failure, there's a seed of a lesson to be learned. And the reason it's a seed and not a flower is because you can either germinate that seed and grow that seed to learn from it and use it in what you do in the future, or you can let that seed die. And so it's really up to you on how you look at what what tough times will do for you.
Tough time, or everything. When I played golf, I never won. I never learned when I won tournaments and stuff. I gained more confidence, but I didn't really learn anything that was valuable down the road. You really learn from your failures. I'm not afraid to fail. There's some things that I don't want people to tell me or say you shouldn't do that, and me not go do it, because I have to know. Sometimes you're like, I need to know if that's the yes or no, and I got to experience it myself. And if I fall on my face, fine, as long as I don't fall too hard that that I can't get back up. But every single time you can get back up.
That's right.
Well, Kevin, thank you so much for coming on here. Are you in Phoenix? Are you in Arizona?
I'm in Scottsdale, yeah.
Oh, perfect. So we'll go to Top Golf and we'll go crush some golf balls together and hang out.
Let's go.
Oh my God. I won the $10,000 in cash that I won in a putting tournament this weekend.
What?
$10,000 cash in a putting tournament indoor. It's called the Putting World. The place is legit here in North Scottsdale. And it's not like miniature golf putting. Mark, can you grab the thing? And it literally, it's so fun. It's a bar, everything, and they had a tournament. And I played golf professionally for 10 years, so I'm like, sign up for the tournament. It was $10,000 cash for first place, and I got a Happy Gilmore check. So
I love
That's
it.
fantastic. Yeah. So what I heard him say is
we'll go there. We go to Top Golf, wherever you want to go.
Let's go. Yeah.
Okay, cool. Well, Ingrid, I'm gonna let you close this out or ask any more questions.
Well, guys, remember, you're getting this podcast and all this value from folks like Kevin for free 99. So please hit that subscribe button, that like button for this episode. We only got two like buttons. We had over 70 people at one point. And make sure that you're following Kevin on Vault Leverage Capital. DM him. Him and Rochelle will help you. I can attest that the service has been spectacular. Many blessings to you, Kevin. I hope that your business, hits a par. No, wait, a birdie, or hole in one.
Eagle.
I can't say hole in one because that's just perfection, and that's just not,
Eagle.
Then you got nothing to look forward to and grow for.
That's right. Yeah.
It's
But
the journey, not the destination.
thank you to my co-host Caroline for coming in here. Tell May I love her. Her partner May got a Teacher of the Year award, and tonight she's getting her award. So we're so excited. Hopefully you guys have a nice night out, and let her know that we love her. Thank you for being an amazing special ed teacher. And yeah, go follow all of us on all the socials, and we love you, and see you next week on Wednesday at 4 p.m. Arizona time.
And don't forget, when you message Kevin, tell him, say, hey, I saw you on Ingryd and Caroline's podcast. We want to work with you, so Kevin knows where you heard from him. Bye, everybody. Thank you so much, Kevin.
You girls are awesome. I'm beyond impressed with the talking points and everything. So thank you for having me.
Thank you.